So I was looking for a draw to these inefficiencies here. This is one of my templates where I keep track of all the new day opening gaps. So from 7 a.m., the pre-session hours, ICT has taught us to look for where the multitude, or where several of these gaps, either new day opening gaps or new week opening gaps are, because they act like a magnet. They'll normally draw price to them. So at 7 a.m., which is the New York Open kill zone, you see we were way north of all these inefficiencies, and we rallied up, fell short to hit this new day opening gap here, which is today's new day opening gap. So if it's failing to get to that, what it's indicating to you is it's bearish. It wants to go down. So it started gravitating down. Then right at 9:30, opening bell, we opened here. You were still north of all these inefficiencies, but look, this is not random. The candles here are stopping, even the wicks, they are stopping right on that new day opening gap. And there's a fair value gap here, you can see, which is respecting it. So whenever you see a fair value gap that's laying on top of a new day opening gap or new week opening gap, that's high probability. Then it started moving down. So at 9:30, don't anticipate that it will rally up. It will just move towards where the larger inefficiencies are. So I had a trade that I entered, but it ran so quickly. By the time I was setting up the stream OBS to start the recording, it had already moved to my target. But I'll show you one of the other things that ICT has taught us is whenever you have a huge opening range gap. So you can see this chart is on regular trading hours. This is where we closed yesterday at 4:14. We've opened here. So it's a huge opening range gap. So if you try to get a measurement on that, it's over 170 handles. 170.25 handles. So one of the rules ICT taught us is when you have a huge opening range gap like this, which is more than 120 handles, this is 170, price is likely to leave it unfilled and move further in the opposite direction of that gap, and it may return to that gap at a later time. So with all that in mind, I took an execution here. I was waiting to see whether it will want to move inside the gap a bit, but it was not interested in doing that. So the 9:30 candle is here. So it opened, wicked up, but see, not to a random level. First presented fair value gap from Wednesday. It stops there. It can't even go to the high. Moves down. Moves down, closes here. Any attempt to go up, they can't even revisit this fair value gap. So it's weak. Then that's a consequent encroachment of opening range gaps that I normally track again. So it's hitting it, displacing. So the first presented fair value gap is here. It can't even go to it, leaves another huge fair value gap. So you can see I entered on this candle here, this one, as it was going down. After this candlestick created a fair value gap, then it could not even get to the midpoint of that fair value gap. Again, indicating it's weak. It can't even print to that half point or consequent encroachment. Then I was putting a measurement here on the wick, because if it's indeed weak and it wants to keep going down, the midpoint of that wick, remember wicks are gaps, the midpoint of that wick should not be traded to. Look what happens here. it doesn't get to it, then it melts down. By the time I was setting the recording on OBS, it had hit my target, which was 30 handles. You can see the entry was at 25,281, 25,251 is the exit. So that's 30 handles. Entering on this candle. So that's 1, 2, 3, 4, 5. Within 5 minutes, 5 handles in the pocket. That's why I was telling you yesterday. I like trading the New York session because it moves. There's crazy volatility there. So, but all that was, there was a premise to it. I was looking for price to draw to these levels. That's where the inefficiencies are. But I don't need all that. I just get my 30 handles, I'm out. So you can see the reaction here. It's trying to seek some a premium level because it's in a deep discount now. You want to seek a short-term premium, and it may want to go towards the first presented fair value gap. But now I'll just trade and see what it wants to do. So I'll see you in the next one.